Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Tuesday, March 19, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? Well, Mrs. Market is above the trend line. She's in an uptrend. The trend is your friend, flirting with the all-time highs, not that far away. Technically speaking, there's nothing wrong with this tape. That's the thing we have to go by when around the all-time highs, above all the trend lines, all the moving averages. She's above everything. When you look at this thing from the other day, all she did was have a 1 or 2 day pullback into the 20-period moving average, gap higher open yesterday, crap out close, right back up today. Nothing wrong with this tape. Be the umpire calling balls and strikes. Look at the weekly chart. We have a sign and or signal of a trend change, but the market has not, and that was 2 weeks ago. The market has not been rejected. She's just going sideways around that trend line, around the all-time highs. That's the weekly chart assessment. So what do we have on the board this week? As a reminder, we have Kabuki Theater. What is that? FOMC meeting and announcement. They met today. They will meet again tomorrow. They will come out with their interest rate announcement mid-afternoon. And then we have following Jerry's presser, where the market can certainly become volatile around the announcement and Jerry's presser tomorrow afternoon. We're waiting on the Fed. Let's do a what if. What if the least expected thing, according to the commentators on TV, the talking heads, the pundits, the analysts, everybody under the sun, what if the least thing likely to happen were to happen tomorrow? What is that? The big fat rug pull event. What happens if they just pop the air balloon and all of a sudden the market starts to unravel after the Fed? Where's she going? What's that spot, that juicy spot that nobody would be expecting? Where would that spot be where you would get a huge bounce back in the other direction? And I'll give you more evidence of this later. Remember, this is the just-in-caser. Nobody's expecting this. Let's be prepared as a just-in-caser. 503.50. Why is that? Where does that come from? What is the importance of that place? Well, this is the way we're going to do it, and then it's going to become more clear later. Market runs up to that spot. Market gets rejected from that spot and comes down a little bit. That spot's important. How do we know that? The market told us that by getting rejected at that spot. So what happens at some point in the future? That becomes a breakout area. So in the future, you could see here, market gapped up to this spot, exact spot, and took off, never looked back. That is a bona fide breakout area. The market will eventually be back to run a test of said breakout area. Just as a just-in-caser, we've got Kabuki Theater tomorrow. We've got some other stuff going on. We have the Spring Equinox, also known as a tinfoil hat event. That happens this evening, late in the evening, so we have to be aware tomorrow. There can be a shift. There doesn't have to be a trend change on these events, but we're aware that a lot of times the market does and can and will shift directions on these events. There's a bigger one coming in about 3 weeks. We'll be on top of that one too, but we need to know about this one. Also, from the trading room, we have the 24th anniversary. This one is courtesy of Chad in the trading room, the live room. We have the 24th anniversary of the .com high coming up this week. That's another thing of note, puzzle piece that we want to know about. So here's the thing. If by chance, sometime after the Fed, whether it's tomorrow or the following day, you find the market down at 503.50, might want to raise an eyebrow. 503.50 will be at minimum of some intraday support, even if they spike it a little bit. Write that down, put it on a sticky note. I'm not saying they go down there tomorrow. I'm saying if they went down there tomorrow. After the Fed, they can go the other way. They can make new highs and keep going. Anything is possible. What's this all about? Mr. MicroStrategy. What are we doing with that? Well, we traded this in the live room today. Where? Quote unquote, you have to let them get below 1250. I put the line at 1246. They spiked it by a little bit. Had a $200 rocket ride back in the other direction. How you doing? Live trading room trade. Another live trading room trade. Alcoa moving after the opening bell. Identified the number. Bounced back in the other direction. Nice trade. Of course we traded Tesla today. We've been trading Tesla for the last several days. Tesla has been a bonanza. Where did we trade Tesla today? Quote, unquote. Yesterday's 166 is today's 167.38. Now they came up 4 cents short. The low today was 167.42. Nice rocket ride back in the other direction. Plenty of traders hopped on board in Tesla this morning. We've got something for everybody. What about inside the numbers? What was going on in the notes today? We had the numbers, but they didn't get low enough this morning for my classic morning trade buy opportunity, catch the low of day. Wanted them a little bit lower. They didn't go there. So we run with the numbers saying, hey, look, if they get above X, they go to Y. If they get above Y, they go to Z. Pause the video, read the notes, go back to the chart, and double check the work. We had a mini pre-market meltdown, and then we had the thieves in the morning that picked up the shares down at the area that we wanted them. They never went back after the opening bell. We call those the thieves in the morning. The area we wanted, 510.25 down to 509.35 for a bounce back in the other direction zone. They never went down there, so be it. So we traded Mr. and Tesla instead. Pause the video, read the notes, go back to the chart to double check the work. You'll see all the numbers in here. If they get above this, they go to this. Get above this, they go to this. They basically went up all day long after making the morning low. One thing I told the traders in the live room that were asking questions as we were closing the morning session was they were getting close to this gap at 512.87. Wanted to know if they could short the gap, and I said no. The morning session is over, getting into lunchtime. We call that torture time. Never short a dull tape, all that stuff. We had a lengthy few-minute discussion on that and said, no, don't short that number. It's a torture trade. That was the gap we were looking at, 512.87, and look what happened. They never looked back. They didn't even stop to have a cup of coffee for long. Never short a dull tape, in an uptrend, around new highs. Very difficult endeavor. Not all gaps are created equal. Do this. If I saved you a world of hurt, if you're a participant in the live room and you were considering shorting the tape and you took what I said and you said, nope, not going to do it, post a comment under the video if I saved you a pie in the face. What's going on over in Camp IWM? Well, they had a nice rally today. They're trying to come back to retest the 20-period moving average from underneath. What's the 199.15 again? Do we need a refresher course on that? Remember, that was a big-time weekly chart, breakup candle low, 199.15. That's a line in the sand. F visited, and they came close. They were in a stone's throw, spitting distance, chip shot away. That's generally an area you're going to have a bull-bear battle. Why? They're not going to give that up so fast. Even if they spike it and get below it intra-week, at some point they're going to want to fight back to at least try and recapture that spot. All charts act and react the same way. What about the folks down at the transportation department? Convergence of the 100 and 200 period moving average. Talked about that yesterday. They hit one, not the other today. Bounced back in the other direction. Up 122 points, 0.8%. A little bit of relative strength in my second favorite market leading indicator. On par / a touch of relative weakness for IWM. We're not going to read too deep into either of those things today. Especially since we're air quoting waiting on the Fed. Anything can happen, change direction, rug pull, big time rally following the Fed tomorrow. anything goes. You throw the charts out for a couple hours, other than the extreme big-time numbers. But they'll whip around. It looks like an EKG from an intraday short-term perspective after the Fed announcement, during Jerry's presser, all that stuff. It's an EKG on a 5-minute chart. What about the Q people trying to recapture that 20-period moving average? Probably closed a few pennies above it today. The trend is your friend until proven otherwise. This weekly chart giving home base a chance to creep up the price. Price going sideways for a few weeks. Common, normal, garden variety stuff. What about the financials? If there's nothing wrong with the financials, there's nothing wrong with the overall and underneath structure of the market. Financials are strong, above 40.80, 41.40 is on the table. They've been in between couple 3 days now. It's in an uptrend. The trend is your friend until your shit gets thrown out the window. No material change, no any change. This will look familiar. We just talked about this in the spiders, a like type of area. Look what happened today in the SMH. Gave you this area week ago, 2 weeks ago. We talked about 213.35. What does it represent? Let's use a refresher. Well, right here is that area that we just talked about in the spiders, the what if area. Market ran up to there, couldn't get through. The market's telling you that price is important, pulled back, gapped above it. Eventually, they'll come back to retest a breakout area. That is a bona fide breakout area. Same discussion we just had in the spiders before. They did the thing today in the SMH, or smash mouth, Philadelphia Semiconductor Index. How about a little intermission, hot off the press? I look over at my email while I'm talking on the video somehow, and I get this coming in from Nate B., who's a participant inside the Numbers live room. Check this out. He says, I like apples. Brokerage account up 2,690 today. Check out this. It's not a tremendous account. That's a huge percentage gain in one day. Well done, Nate B. Can't tell you how happy it makes when other people are making money. It's like a pay it forward routine. Pay it forward. Let's get back to smash mouth. So we talked about the breakout area. We talked about the breakup candle low and the gap underneath. They came kind of in between a little bit. They spiked this fish by a few pennies. Low of day today, 212.82. This gap down here, closing print was 211.95. So they spiked that number just for a few minutes, reversed back in the other direction. You look at the hourly chart, and what did they do? They spiked it, reversed back in the other direction. It worked from at least, and we said this last night, the night before, every time I talk about this, at minimum, quote unquote, from an intraday perspective, you're going to get a bounce/bull bear battle at these places. The numbers work. By the way, we're jumping around a little bit tonight, but I forgot to talk about stocks on the move. So let's take a look at the charts of Micron, Coin, and CLSK. Did anybody make any money today inside the numbers, live room, stocks on the move, Mr. Tesla, any of this stuff? Post a comment under the video. How you doing? Is the live room working? Is inside the numbers working? Do we have the numbers? Are you making money with the numbers? Other traders need to know this. Can they take advantage of this? Is this a bunch of bullshit or is this real? Post it under the video, please. How about Micron? 91.46, right out of the stocks on the move list. Spiked it by a little bit. Rip, roar, and rocket ride back in the other direction. And we had participants in Micron Technology live room inside the numbers. Nice trade. The numbers work. How about Coin? Had a little bit of a bonanza in Coin for a few days. So we had numbers 224.21, 220.95, and 217.60. They opened below the first number. So guess what? It's off the board, doesn't exist. Here's where they came into the second number, short of the third, came into the third, rocket ride back in the other direction. So what did they do? You got it. They gave you the trade in Coin. Nice trade. If you just painted by the numbers, your average is less than 220. What did they give you today? All the way up here at 223, 233, pardon me, and change. That's a rip-roaring rocket ride, the numbers work type situation. How about CLSK, Clean Spark, 1545, 1524, turned around, went back in the other direction. Sound familiar? It sounds like a broken record. We had some fun today in the live room with Darren. Darren was in Clean Spark, thought he was the only one out of the money as he was taking a ride down to the second number from 1545. I had to talk him off the ledge. Darren was fine. Anybody else that took Clean Spark was fine. They got the reversal, rocket ride, and paid accordingly. Nice trade, Darren, and all other participants. See how much fun this could be each and every day if you have the numbers, you have a really good group of traders that understands how this works. Ask the right questions. We have great discussions. We learn, we teach, we figure out how the market works together, and we know what to look for each and every day. We'll keep having a good time. Bonanzas. Have I told you how much I appreciate each and every one of you? Without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.